Would you buy or sell? You have 5 seconds to decide. Alright, let's break this chart. The first thing we do is mark our box around the previous swing high and the previous swing low. This entire area becomes our box and helps us understand where the strongest buyers and sellers are positioned. After price pushed aggressively lower, it eventually reached the bottom of the box. Then something important happened. A John Wick candlestick got printed at the bottom of the box. Also, notice how price respected the bottom of the box multiple times instead of breaking through it. Because of this aggressive move, most retail traders started entering short positions expecting continuation to the downside. But we know the market has not broken below the box yet, and this entire move is still happening inside the range. This is exactly how traders get trapped. So we can say the bottom of the box is still being defended by buyers, and this zone is full of liquidity. Now, instead of entering too early, we wait for confirmation. As soon as the next candle goes above the John Wick candle, we enter long. Stop loss goes below the bottom of the box, and our target becomes the top of the box. Beginners, please understand this. The box is not there to predict the future. The box is there to help you stay patient and wait for confirmation. Because once you start forcing trades in the middle of the box, that's where traders lose money. Now, let's see what happens next. Yes, our target has been perfectly achieved. Stupid simple. Comment Fury for full free breakdown of this strategy. Would you buy or sell? You have 5 seconds to decide. Alright, let's break this chart. The first thing we do is draw our magic lines around the previous swing high and the previous swing low. These two levels tell us where the strongest buyers and sellers are positioned. Earlier, price made a strong move down toward the bottom magic line, clearly showing bearish momentum. After that, the market started pushing back up, but something important started happening during that move. Momentum was slowing down. Price kept moving higher, but buyers were struggling to break above the top magic line. This is exactly where traders get trapped. Many traders see price moving upward and immediately think the market is going to continue up. But if you look closely, price is still respecting the top magic line. And instead of breaking higher, we got a bearish John Wick candlestick. That's a small red candle with a large wick on the top. This formation tells us two things. First, it tells us that buyers are losing strength. Second, it tells us sellers are beginning to step back into the market. But instead of entering too early, we wait for confirmation. As soon as the next candle goes below the John Wick candle, that becomes our sell entry. We place our stop loss just above the wick, and our target becomes the bottom magic line. Now let's see what happens next. Yes, our target has been perfectly achieved. Stupid simple. Comment guide for full free breakdown of this strategy. Would you buy or sell? You have 5 seconds to decide. Alright, let's break this chart. Price already made a strong move from the previous swing low toward the previous swing high, with clear bullish momentum. As price approached the previous swing high, the market started slowing down. Near the top, we see a sharp bearish John Wick candlestick with a large wick on the top. This candle shows that buyers initially pushed price higher fast, but sellers absorbed that buying pressure and immediately forced price back down. Many traders place stop losses and breakout entries above previous highs, so when those levels got swept, it provided liquidity for larger sellers. Based on this logic, a sell setup can be considered here. We wait for the next candle to go below the bearish John Wick candle. Then we enter short. Stop loss goes above the recent wick. and our target becomes the previous swing low. Now let's see what happens in the next chapter of the market. Yes, our target has been perfectly achieved. Stupid simple. Comment guide for full free breakdown of this strategy.